What's up, everybody? Welcome back to Wealth Not Wait. I'm your host, as always, Joseph Queza. On the Wealth Not Wait channel, this is episode number 4 of Making a Mogul. So this episode is just specifically going to be more of an update video. A lot has happened. I kind of set up my videos to try and record them in advance, but this is probably the more up-to-date when I'm recording it the week it's going to come out. So a lot has happened specifically with the Landa app, and that is what we're using to invest. So if you follow and you know that the Landa has been doing a lot of stuff that has been majority proving for investors, so we're going to get into it. The first one is that they've changed the way dividends work. This is a huge fucking thing. So the big gist of it is, before, say they make $10,000 on a property that they would distribute to investors. So if they had 10,000 shares and you would get $1 a share, that means each person or each share you own, you get $1. Obviously, that's how the math works. If they made 10 grand, just using easy, simple numbers. Before, though, if only 1,000 shares were sold, they'd pay out that $1 per share, so they'd only give out $1,000, and they'd keep the other 9 grand for themselves, or however they set it up, whatever, but it wouldn't go out to investors. Now, however, the thing is, they're giving out that other $9,000. So if they make $10,000 that's going towards investors, it doesn't matter how many shares they've sold, they're giving out the whole 10 grand, which means instead of making $1 per share, they're going to give out $10 per share. But that's only until they sell all the shares. The more shares they sell, if they have 1,000 shares sold, you're getting $10 a share. If they sold 5,000 shares, you're getting $2 a share, and it's going to dilute the income as it goes on. So it's really good for the investors in the short term, because all that money isn't just sitting somewhere then, which I wonder how that's now going to work with their balance sheet. You know, I don't want them going out of business, but it's obviously better for the individual investors. That's awesome. Like, you're getting $10 a share now, but it's only for a limited time until more people buy that property. It's, I guess, an incentive to get people to buy the properties, so that way, oh, hey, I'm making $8 a share, at least for the next couple months. I want to go buy this property. So I want to see how that's going to, one, affect the market, and then two, I wanted to see how they advertise it. Now they've started doing it. They advertise the full amount. So they say, hey, you're going to get $10 a share. Here's how many shares we've sold. So they tell you, they give you that information up front, with the expectation that's going to be diluted, but they don't show you what you're going to get after all the shares are sold. I want to do it as, this is the rock bottom number I'm going to get. That's the way I would want to work out my investments. I don't want to schedule in a short-term flexible thing into my investments. I want to know, like, when I bought my investment, I'm getting 10%. If I buy it right now at $4, I'm getting 40 cents a year, whatever it is. I'm getting 10% back on my investment. That's what I'm getting. Now, it's like, hey, you're going to get $5 back for your $4 share, but that's only for the first month. And the second month, you're going to get $4.30. And then the third month, you're going to get $2 because more shares are being sold. So the way I figured it out is, it's $1,000 for a single-family home, $10,000 for a multi-family home. You take the amount of money that they're giving out to their investors, and you divide that by the numbers of shares. That's how much you're going to get per share. So say they make $10,000 that they're giving out to investors, divided by 10,000 shares, you're making $1 per share. Or divided by, well, it's 10,000 or 100,000, or then you're making 10 cents a share. That's how they're going to set it up then, and then obviously monthly, and you could set that up yearly, divide, times by 12. But right now, the advertising price is what you're going to make since they haven't sold all those shares. So just keep that in mind. That's the math I'm going to be doing with it. Obviously, I'm going to be getting a small boost. Awesome. Until those shares are sold. But I want to know the rock bottom price, and that is the price I'll factor in as far as my investment. Obviously, if you're following along at home, you can set up however you want. I'll just enjoy the kind of short-term boost, with knowing then that I'm getting, when all the shares are sold, this is my rock bottom price, and that's what I want to be good. Stuff is that it's closer to the stock market than I've realized. I tried to purchase some shares. I thought the share prices were fluctuating very heavily because you're able to see what they sell at. It's a lot like the stock market. Like, I was like 10 cents under what the average asking price was, and it didn't go through. Nobody was willing to sell it at that point. In fact, the price was going down, and no one was still selling it, and then it went up. And it's very much like the stock price market. Like, you're going to pay the average share price. That's what you're planning on. If it says $4.20 for a share, you're paying $4.20 for a share. So I kind of fucked around with it for a couple days, about a week. It's only open like normal stock market hours. It's not open on the weekends or anything like that. So I ended up paying $5 a share, because in the time that I was making that purchase and trying to see if I could get it for a discount, the share prices have gone up, and I ended up paying $5 more for that set of shares than I would before. So I think I spent $25 instead of $20. But I still got that investment, and I know it's a good investment because I've seen the investments now steadily growing as more people now jump onto this app. A lot of people are jumping onto this app because, one, there's still a lot of bugs and fixes, or they're fixing a lot of bugs. Loading was a bit of an issue, getting things set up, the amount of time it took, the kind of app popping in and out, a lot of like internal bug fixes, and also the amount of information they're giving out is a little not quite there yet. I don't think it's anything shady, but it doesn't seem like they give all that information up front, readily accessible. You have to go digging for some of it. And again, it may take like 2 to 3 minutes for the fucking app to load, and then I'm trying to do an investment, and then the price isn't loading. Now they're working on that very, very heavily. So as it gets better, more people are talking about it, and more people are jumping on now because the app is a lot more streamlined and a lot better to use. They're also adding more things like Charlotte, North Carolina, I've seen, in addition, of course, to Tampa and Orlando, and a whole bunch of other stuff that they're adding. A lot of marketplaces coming in the near future. But also, they had a $25 million funding round. They now got $25 million in the new funding round. Obviously, that's good because now they have $25 million more in capital, but I want to see how their books are doing. I don't know if you're investing in much as the app as you are in the individual properties. And again, it's much like the stock market, but instead of just worrying about the specific stock, worrying about the specific property, you also have to worry about the NASDAQ, because the NASDAQ's not going out of business. You know, I'm not going to, like, TD Ameritrade isn't going to close down tomorrow, you know, knock on wood. You know, fucking Robinhood isn't going to close down tomorrow, again, knock on wood. Weeble's not going to close down tomorrow, knock on wood. You know, whatever trading platform, this is specifically for this. They're a business. Landa is a business. They're still a new business. They're not even a year old. Now they have a high valuation. They're making a lot of progress. That's awesome. I see more people coming in, but they have to remain profitable. So this is awesome. This is good. I just seen it was $25 million that they came up with. They're using that, obviously. They're buying new properties. They're building and they're expanding. More people coming in. The app is getting better. It looks like what they're doing is correct, but I have not seen their books. They could still be taking a heavy loss, and 6 months from now, the app can go out of business. I want it to happen. Obviously, I'm putting money into it. I'm betting on both the jockey and the horse here, both the app and the individual property itself. It looks like things are going well, but still remain skeptical because this is an alternative investment. There is no backing for it. If they go out of business, you're fucked. So put money in, obviously, that you're willing to lose and that you don't need. I would not make this a significant amount of my portfolio. I don't know how you're going to set it up, but that's still something I'm putting in money. I'm putting in good money for it, trying to build, trying to grow, trying to learn with this as I go along. The app looks like it's growing and everything's doing very well, but still remain strong and don't just fucking throw caution to the wind and go headfirst into it. Take a calculated risk with it. Something else I've also seen is that they don't have a substantial presence in the Atlanta metro area, but they have properties in the Atlanta metro area and some other spots. So they have like these big things like I showed. They have Stockboro and they have Brooklyn, they have now Tampa and Orlando, they have all these places coming, but that's something they have a substantial like 3 or 4 properties in. They have these individual one-off properties or like 1 or 2, I think maybe 3, maybe, but they have other areas that they don't advertise like, yes, this is a place we have it, like somewhere in Atlanta, somewhere over here, somewhere over there. They have spots where they're in select areas, but it's like 1 or 2 properties in that area, and it's not advertised. You have to scroll down a little further, and then you'll see in that area, hey, the Atlanta metro area. And that may also be a good property. Like Atlanta obviously is a big boom. That's something they talked about, along with Jacksonville and other places. But they have some areas, so that's something I'm going to be looking at, and I advise that if you're going to look at that, see maybe that's something you would like. But like at the Atlanta metro area and other things, they have those individual 1 or 2 off properties in that area. Also, something I learned, I was watching a Ben Mallah video. It's not one I was watching for this. It was just one I was watching on my own accord. And I seen they were talking about 95% occupancy rating, which means 95% of the time your property is filled. That's usually pretty good, 95% or above. So if this property hasn't been filled for a couple months, it's probably not a good thing to look at. But obviously, like in the area I looked at, there's 95 to 96% average occupancy rating, which means a lot of these places aren't going to be vacant for long. And that's something I definitely look at when investing in my properties is this going to be vacant if these current tenants leave? But the prices are usually good. The properties look pretty good. They're in good, busy areas with high occupancy ratings. I don't see that being a huge issue, at least for the ones I invest in, maybe some others. But that's definitely something that's going to be important, is that as long as 95% of the time it's occupied, it's making money. Otherwise, you're spending money. You're spending money on a mortgage. You're maintaining it. You're doing all this stuff, and you have no cash flow coming in. And we know we want that sweet, sweet cash flow. Obviously, that's very important. So that's going to be the big update. That's going to be the big update. That's kind of everything that's going on with Landa and the app, and just things that I'm going to be looking at. Obviously, they're making a lot of progress. Obviously, it looks like from the outside, at least, things are going well with Landa. They're growing, prices are growing, they're making more money, they're trying to pass off their investors, they have more funding, and if they're doing things correctly for business, it looks like they're going to be a great opportunity for an alternative investment. I am very excited, and in the next video, I'm going to be doing more. I'm going to look at it because, like I said, it's more of a stock market type purchase than just a real estate. It's like a real estate back. It's very close to a REIT type thing. I'm going to be trying to apply some of my stock knowledge, but then also looking at more real estate stuff. So I learn the real estate, I learn what it's in, finding good real estate, but then also applying my stock knowledge to see if I could do that and value the specific stock itself. Because again, what you're buying is a share in the business that owns that property. You're not buying the property outright. Your name is not on the lease. So, but that's the big update with Landa. Everything's going good. Everything's going strong so far. I'm really happy to make this update. And let me know in the comments below if you're following along, if you're enjoying this. Do you have other apps that you're looking at? What do you think? Is this something that you have an interest in, that you want to jump on? Or are you still a little reserved and maybe holding back a little bit? Let me know in the comments below. So if you guys like this video, make sure you like, comment, and subscribe. And I'll see you all next time. Peace.